tax season begins in less than 2 weeks. Yup, it is that time of year again. So 2 Wants to Know is calling in the experts to guide us all through how to get the most deductions or the most money back. We're joined by Ryan and Tiffany Dodson, both with Staniland Dodson and Associates. All right, so Tiffany, let's start with you. Let's start with, when does tax season open and when is tax day this year? Because it seems like there's always some kind of mix-up somewhere.
The IRS is open at the usual time. They'll start taking individual returns January 26th, and you must file an on-time return or extend by April the 15th.
Okay, so April the 15th it is this year. Okay, so Ryan, let's talk about, there's a whole bunch of changes in the tax law this time around. So let's talk about 3 of the top ones, and I know child deductions kind of starts it right off.
Yeah, so right off the top, the child tax credit for those who have kids that are less than 17 years old has increased. It's going up to $2,200, which is an increase from $2,000. So congratulations, 10% raise, everyone. And a couple other things that have happened. Number one, there's a $6,000 deduction per person for Social Security if your income is below certain limits, like 75,000 if you're single, or 150,000 if you're married filing jointly. And the last one is that there's no tax on overtime this year, and so that's up to $12,500 if you're married, or 25,000. I'm sorry, 12,500 if you're single. 25,000 if you're married. Of course, the same income limitations on those items. However, what's to be real precise about that, it's only on the extra 0.5. It's not on the whole thing. So like if you earn $20 an hour, it's only on that extra $10 an hour that you're getting, not the whole $30 an hour.
Ah, okay. There's always that fine print that you got to know what's going on there. Okay. All right, Tiffany, let's go to what I think a lot of people are looking forward to this year, especially if they bought a new car in 2025. And that is hearing that you could deduct your auto loan interest. But of course, again, more fine print with that.
Yes, so as you said, a new car bought in 2025, assembled in the US, and it needs to be under 14,000 pounds. So most of your cars, SUVs, light duty trucks, they're going to make that pass. And you can deduct up to $10,000 of your interest, but now you need, or deduct that off your return, but you need to meet certain income deadlines. If you are individual, that's under 100,000 per year. And if you're married filing joint, that's $200,000.
And the other thing is, it has to be assembled in the United States. So
Must be
how do we know
assembled
that?
in the US. That is correct.
Okay, so we need to look for that in maybe our car manufacturers, or I'm sure there's a whole list of the cars that are actually assembled in the U.S.
There's a whole list of them, and it should also be listed in your purchase information on that car.
Okay, something else that might grab your attention, you might have heard about this, and this is about tips. So if that is your job or that is your side hustle, you wait on tables or you do some kind of service that you get tips, what happens with that this year?
So this year, there's up to a $25,000 deduction if you earn tips, but it has to be, of course, in an industry that normally receives tips. So not me as a CPA. You can't tip me as a CPA and I get to deduct it. It has to be if you're in a normal industry that receives tips. Say you do DoorDash or you do Uber, or maybe you're doing, you're on wait staff or bartenders, those regular industries. And then that is on the entire tax return. Doesn't matter if it's you or your spouse. And of course, once again, there are income limitations as to who gets to take it and who does not.
Okay. Every single year, people, are thinking to themselves, well, I'm going to do my taxes online, or there's some old school people who like to do it by paper. What is the rule this year, Tiffany? Can you still do both?
You can still do both. However, most people electronically file. It is very rare that a return is mailed for many reasons. There are some online options available through many providers that folks can look at. And of course, there are always paid professionals that are out there to get you every penny that you're due, whether that's making sure you don't have to overpay in your taxes or you get the biggest refund that you're allowed to take.
All right, and Ryan, didn't we hear something about how the federal government is no longer going to be sending out paper checks?
That is correct. They no longer want to send out any paper checks, so their preference is going to be, of course, for you to enter your direct deposit information, or of course, that is to send it that way. You still have the old-fashioned, you wanted this in a savings bond, but just put your direct deposit information in. You get it a lot faster, and the federal government doesn't want to send a check.
I had no idea that you could actually get your refund in a savings bond. Okay, that's a new one for me. I had not heard that before. Okay, Tiffany, a lot of people do their taxes on their own, and they make very common mistakes. What are some common mistakes that they make that we should be paying attention to this year?
Sometimes they miss credits that they're actually entitled to. They will not look at things like even the child tax credit, which Ryan has covered. They can miss a new deduction like the Social Security deduction that Ryan has talked about. So, unfortunately, often when they do their taxes, they cheat themselves of deductions that they could take, that they're entitled to take, but they're just not aware of where to put them or how to take them. Now, when you mention paper, used to be math errors were one of the most common, and that's why so many people no longer do them on paper. But it's really important to make sure you're taking advantage of every deduction and credit that's available to you. And tax law changes every year, just as we're discussing, and it can be quite cumbersome to keep up with that on your own.
For sure. All right. So this is just the beginning of the tax season. Remember, it opens up in about 2 weeks on the 26th. So we'll be having these tax discussions several more times before April 15th hits. So thank you both for your time and your expertise. If you missed any of this, we're going to be putting this in the Two Wants to Know section of our website.